All right, we're back. Stocks are rallying, as you know, to begin President Trump's second term in office. Joining me here at Post 9 with her outlook is Morgan Stanley Private Wealth Management's Sherry Pulse. Good to see you again.
Great to see you.
You're surprised by anything? Good week last week, and now we're off to the races as we, begin Trump 2.0?
Yeah, no, I'm not surprised just because there's been so much talk. It kind of reminds me of what the Fed usually does when they're trying to talk either rates up or down and prepare us for change. But I think that the pace of change may be taking investors a little bit off guard. And that means that central to portfolios right now, you've got to be liquid and dynamic and ready to make change and then make change again and then, frankly, change again.
Yeah. I mean, if you get a tariff announcement, overnight, is the market just like this, but in reverse red?
Well,
is that what we're kind of like bracing for? How do you think about that whole issue?
Yeah, well, I'm glad you asked the tariff question up front because, Morgan Stanley, even if our analysts think even if all the tariffs are implemented, it's probably a 0.3% of GDP. It increases inflation, which maybe by 1.3%. But the bigger story that tariffs sit within, which I think is the thing that investors need to focus on, is de-globalization is happening. So it's not just a debate or a discussion. Mm-hmm. And the best way to invest in that is to understand the whole point of why we globalized in the first place. De-globalization is the opposite, which means things get more expensive. It's fundamentally inflationary. But the antidote is going to be the other moment, which is this deep innovation that allows AI to take on the role of some of the human labor complexity and the manufacturing reimagination.
So does that mean that you're investing in I guess, a purely exceptional USA rather than looking abroad where there's going to be some potential, more acute issues?
Yeah, I'm talking to investors about just resisting being lazy with diversification. Just because you're supposed to do something doesn't mean it's actually the right thing to do in this moment. And so U.S. exceptionalism is real. It's the centerpiece of innovation centered on AI, manufacturing, reimagining how we're going to download a new way of being in the world, just as we are de-globalizing the old world order. And so we're overweighting U.S. right now. From a market cap standpoint, we're staying large cap, minimizing small cap exposure just because we think that rates, while they're going lower, will probably stay higher for longer. And the international markets and the international scene is really where weakness is around the world. And so it makes a lot of sense.
And when you say stay large up the cap space, are you talking beyond just mega cap tech? And if so, what areas?
Yeah, well, I think the other reality we need to embrace is we're going to continue to have very narrow corridors of performance return. And so stock selection is going to be crucial, but we're broadening into these other thematics that are centered on this administration, really around materials, defense, energy, because with deglobalization comes also military uncertainty. And so those themes obviously should do well this year, and we're already starting to see some bumps in that.
I mean, it sounds to me that you kind of like everything with the nuance of everything big. And, the sector plays that you have, AI, that obviously speaks to larger cap stocks, financials, you like the big banks, healthcare, the larger companies within that space, industrials and materials. What is there something you don't like, even if it's a larger company?
Well, I've never been a big fan of the oil play just because it's such a policy and political football that can change on a dime. And so what we're really investing in are these enduring thematics that sort of transcend party politics and policy. Healthcare is a perfect example as a space that, regardless of what happens around the debate around vaccines that could find its way into policy, we have all these other enduring epigenetic breakthroughs that are happening that are going to help with longevity, for example. And then within the financials, I think what we want to be doing is looking in the subsectors that are going to benefit from deregulation, as an example.
I thought that Jim Cramer had a really good take on this morning, that even though you have the president with a drill mantra, the energy companies have said, no. Like, we don't really want to drill more. We'd rather take that cash and return it to shareholders because they've seen how beneficial that change in thinking has been to their share price. So while the president is going to talk a lot about, and he's declared this energy emergency in the United States already. Is that how you're thinking of it, too? Because you could sit and say, well, he's pro-energy. These stocks are going to do really well. You say not so fast.
Well, I love that you brought this up with Jim, because there's a lot of talk, and then we want to focus on earnings reality, right? So a third of these energy companies have reinvented themselves into natural gas companies, for example. And so we want to focus on three things: earnings, innovation, and inflation. And those three metrics are going to basically equal what we think the market will do this year. And what will weigh on the inflation number will be tariffs, de-globalization. I believe that the policymakers, though, are thinking that the antidote, right? Because remember, the incentive of tariffs and de-globalization is to onshore manufacturing here in the United States. And that costs money. And so the antidote to that will be tax policy, taking the corporate tax rate from 21 down to 15 as a way, I think, to provide companies with that earnings spread that they need to buffer that transition. Very different, though, than growing your earnings based on innovation, which is why we're encouraging investors still continue to stay in tech.
All right. Enjoyed the conversation very much. As usual, Sherry, thanks. We'll see you soon.
Welcome.
That's Sherry Paul of Morgan.